Hi, this is Steve, and welcome to another edition of the World of Global Equity Timing. Today we're going to be talking about orange juice and how our global equity timing indices can apply to not only stocks, but to futures and commodities as well. So let's get right to the chart. What we have is orange juice, as I mentioned earlier, and what I'm going to talk about today are two key concepts, one of which is the atom price projector and ADA. Let's first talk about the atom price projector. What the atom price projector tells us is how high or how low a particular commodity is likely to go once we get an atom buy signal or an atom sell signal. Now notice on this particular signal that the projection, once we get the signal, we know in advance the likely area where profits should be taken. And I've created a box there to indicate where Adam said to take profits. Very, very close to the top in this case. Let's take a look at some more examples. Over here we have another sell signal on the atom buy sell engine, and notice the point of taking profits projected in advance at that signal was right here, almost the exact bottom. Another example, we have another sell signal here, and known in advance was that we would expect the commodity orange juice to fall to this level here, which it did, right in the zone of the bottom. I cannot believe how accurate sometimes this atom price projector can be. Here's another sell signal, and look at that. It caught the exact bottom. Now, is it always this accurate? Well, no. We would own the world if it was always this accurate. Sometimes the atom price projector, in terms of what happens with price, sometimes price overshoots the objective, sometimes it undershoots it. But it's astounding how often an advance or decline ends in the area of the atom price projector. So that's one of the things I want to talk to you about today. The other is our accumulation distribution alert oscillator, which is across the bottom. What we're looking for in this oscillator is long periods of distribution of a trading instruments such as orange juice, or long periods of accumulation. Let's focus on the area of decline through here. And what I've done is I've circled the areas of long periods of distribution defined as ADA, accumulation distribution alert oscillator, being negative for 34 days. So I've circled this area right here as a particularly good selling point. Why? Well, because at that sell signal, the ADA oscillator had been below zero in the red for 34 days, and I'd never want to bet, and you wouldn't want to bet either, against a sell signal when we have the ADA oscillator negative for this long a period of time. Good things happen when you are short a commodity trying to make a profit on the downside when that ADA oscillator has been negative for a long time. The other point that it happened was right here again. The ADA oscillator had continued to be negative through this first sell signal and through the second sell signal. So those are patterns we look for. The other signals that we see on this chart, there are two more, did not fulfill 34 days of being negative. However, there's some other patterns that we use around the accumulation distribution alert oscillator that will help us take additional trading signals, and we'll talk about those in the next part of this series on orange juice, part 2. Until we meet again, this is Steve wishing you good timing, good trading, good luck, and good day.